I want to tell you guys basically about 3 ways that you can avoid audits and penalties from the IRS as a small business owner. Basically because we never want to be that person with an IRS audit in your hand. Like, you don't want to be that person with an IRS audit in your hand and you're like, what are you talking about? You want to garnish my bank or levy my bank because I owe you some money. What are you talking about? I want to take your business because you haven't paid your taxes. So you never want to be that person, and then you have to go back and pay, the money they've already given you from the refund, plus penalties on top of that, thousands of dollars on penalties to be added on that. So we can definitely need to get into this, and I'll tell you a little story in a second. But the IRS is ruthless. They ruthless. If you haven't heard a story about what the IRS can do, just know they are ruthless. They are going to forcefully get their money back. They're going to take your money out your bank. They're going to garnish any check that you have, any returns you have. They're confiscating your bank accounts for sure. They don't care. They're going to get it how they're going to get it, and they're going to get it when it's due. So you definitely don't want to be in that position, all right? Let's see. So make sure that, sorry, I'm looking at my notes. Make sure that you get a notebook to take notes in, all right? Get a notebook, something to write this down, because I'm going to throw out a whole bunch of numbers out there, and you don't want to miss those numbers. But not filing taxes or staying up to date with your business, can really bankrupt your company. And one of the things that I'm going to talk about today, the first way to avoid taxes is to report information on your taxes, to report correct information on your taxes. So when I'm talking about that, let me go back. Make sure I didn't miss anything. So the first way to avoid an audit is to report correct information on your taxes. So if you've ever filed taxes with missing information, you are subject to an audit, because what they're doing is they're saying, all right, something's not right, right? So if you ever missed anything, it's subject to an audit and penalties if they find it, all right? So what I wanted to say first was, like I said, I'm not an attorney. Always get the information, go get your personal situation looked at by an attorney. So I had to make that disclaimer again because I don't want to get sued. So when you file your taxes, sometimes, like right now, we're in January the 13th, right? Sometimes you're like, I just want to get it done with. Can you go off of my last check stub and file my taxes? And some people actually do that. I don't do that. The problem with that is if you miss something, right, you are not reporting everything that's been filed with the IRS. So that's W-2s, interest, 1090 interest forms, 1099 forms, retirement distributions. If you haven't gotten those actual pieces of paperwork and you file your taxes without them, you are omitting actual income that needs to be reported. And you are paying less taxes than the actual amount that needs to be reported. So the IRS, let me tell you how the IRS is, okay? So the IRS, basically, the people or the company that's paying you the money, they are required to send the IRS the information that says, hey, this is how much I paid so-and-so, right? So that's one part. The other part is you fill out your tax return and you say, this is how much that first company has paid me. And now they go hand in hand, okay? It checks it off the box. Now it's like they're gone. They don't have to worry about that. But now the second part is if that company reports this information and you just say, oh, I'm not going to worry about it. They're like, where's that other piece at? Where's that money at? They're saying, where's my money at? Because they're getting taxed. They're going to tax you off of the money that you receive. So they're like, where's my money at? And now that just opens up the door for you to now get audited, because they're going to say, listen, ABC company reported that they gave you $20,000 last year, and you're not reporting any of that income. So we're missing out on our percentage of that income because you didn't report it, and now that's where the audit comes in. They're saying you either need to pay this amount because we show that we have proof that you got that money, or you need to come up with a tax return to do what you got to do to not pay as much. You definitely have to make sure you have all your income reported, right? I don't care if it's 3 cents from the bank interest that you received in your bank account last year. Make sure you have it reported, okay? So the biggest story that I have was I get a lot of people that come in to fix stuff. We get a lot of people walking by too. I get a lot of people that come in to fix stuff. So they get the letter. They're like, oh my gosh, the IRS has just sent me this letter. I don't know what it's for. And I'm going through it. It's like, oh yeah, you missed this, 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 and this on your taxes in 2012, now 2017, 2018. And now the IRS has finally caught up. And now they're just like, dude, why didn't you give me my money? Just imagine if you loan somebody money. This is not how what's going on, but if you loan somebody money and they don't want to pay you back, that's what's going on. They're taxing you on this income, and now you're not paying them. They want their money. So if you misrepresent that information, what's going to happen is you're going to get audited for that. The IRS is going to either tell you we're either going to take it, or you're going to pay us, or you're going to do your taxes over and do it the right way. So the problem with that is if you don't put the right amounts on there, if you don't put all your W-2s, if you don't put your interest forms, your 1099s, your distributions from your retirement accounts, if you don't put that stuff on there, not only are you still going to have to pay, but they're going to tax you on that payment. So they're going to add on their fees and interest and everything. So now on top of what you already have to pay back to them, you're gonna have to double it. Kind of like double it. They're gonna tax you for real. So that's how the IRS works. So definitely the first thing to avoid audits is make sure that you're actually reporting your income or your info correctly. And business owners really need to track this. Like, they need to track all the income that's coming in. The biggest thing that's going on right now is PayPal and all these, vendors that didn't used to track the income are now tracking and having to report that. $600, if you made $600 in PayPal or in any of these other companies, they're tracking all that stuff. So you have to keep track of what you're actually reporting, making sure you're catching everything, because, you don't want to have an audit come on later on, right? So business owners have to keep track of that. I personally, to keep track of my income, to keep track of everything going on, because I got a lot going on, y'all, all the time if you haven't seen it. But to keep track of everything going on, I use QuickBooks. I have QuickBooks for my business, for both of my businesses, and then within there, I can track the income. So if I'm getting paid, like if I start a new system this year and say, okay, I'm going to start receiving money from Cash App for my business, in my business QuickBooks, it's going to say this is the money that came in from Cash App. I know how much money came in from PayPal. I know how much money came in from Stripe. I know how much money came in from Honeybook. I know it all because I keep track of it, and keeping track of the things is going to make a huge difference in your life. Just all over. I'm a big budgeter. I keep a budget for everything. But that's gonna make a huge difference. You're gonna understand like where your money's coming from. And then you can go back and track it and make sure that you're reporting the right things. So if you don't know where your money has came from, or if you don't know if you got all your W-2s, your 1099s, look at your bank account. So hopefully you have a bank account, but look at your bank account and see where you've received money from. That's one way you could do it. Another way is to get the QuickBooks set up. Set it up. Attach everything that you has to do with your business to that. Hey, Mona. And attach everything that has to do with that business to that QuickBooks account so that you have everything in one place. I'm doing this because there's a computer screen right here. No, I'm not crazy. Hey, Sai. Yes, make sure you have a QuickBooks. And I'm gonna drop a link later on. Um, 3 months of QuickBooks for a discounted rate. So if you don't have QuickBooks, get it. Okay, $25 a month. I think it's $12.50 for 3 months. $25 a month is the cheapest expense you can ever have. That's gonna change your whole entire life. All right. So that's the first thing. The second way to avoid an audit is to make sure you're tracking the amount that you owe stays under $1,000. So not everybody has to pay the IRS, but this is for the people that owe money every year. Okay, and I'm not talking to the W-2 earners. The W-2 people typically have their taxes taken out of their checks. I'm talking about the sole proprietors or the single member LLCs. All right, so you guys, let's talk about this. So if you owe money to the IRS and you're not having money taken out of your taxes as a W-2 earner and it goes over 1,000, you might need to change your withholding. But as a sole proprietor and a single member LLC, hey, Uncle Mike, if you owe the IRS over $1,000, they can penalize you for not paying estimated taxes. So what they're saying is like, why you owe us so much money? You need to be paying me earlier in the year on the money that you're getting instead of later during tax season. They're just saying like, no. If you owe over 500, you should probably be paying estimated taxes, okay? So estimated taxes is basically every quarter you are paying the IRS amounts that basically add up to how much you should be taxed for the whole year. So you're kind of like paying them in chunks, like you're giving them like residual income. Sorry, it's not funny, but yes, you're paying the IRS for the money that you owe to them for the money that you're making. All right, so they're like, no, we don't want you to wait until the end of the year till you file taxes to pay me my money. I want my money up front or every quarter. So that's what estimated taxes are. So another way, like if you don't do this and you're paying over 1,000 every single year, you're probably being penalized and don't even know it. It's probably just going onto your tax return. So now it's just adding to the amount that you're actually being, like the amount that you're gonna have to pay. So estimated taxes go, so basically for sole proprietors and for single member LLCs, that's where estimated taxes come in if you owe over 1,000. All right, so it is determined off of the estimated gross income, your taxable income, credits, and deductions for the year. So there is a form on the IRS where you can go see like how much you should be paying if you fall into this category. But why not just do it the right way? Avoid the penalties. Get everything set up. You have to have your money set up right. You have to have the tracking, but you can basically determine if you're going to have to pay taxes every year. If you're already paying taxes every year, you can determine if you have to do these estimated taxes. So if you are falling under this category, make sure you're filing your 1040-ES form every quarter. And that's another way to keep a little bit of money in your pocket. But tax planning also helps. That's for the higher income people. All right, so the last and third way that you can avoid a penalty with the IRS as a business owner is to make sure you file the correct business tax forms each year. Sorry, there's people walking behind me. So filing the right tax forms, that's huge. I don't know what happened within 2020 and 2021, but this is the most I've ever seen the state come to a business owner and say, hey, you guys haven't paid your taxes since you opened in 2012. This is the most I've seen these letters. And I feel like, I don't know, they got bored at home or something and they were like, oh, let's just go back and see who hasn't paid us. So now a lot of people are getting the state forms because you typically file the federal when you do your taxes. But a lot of people are getting these state forms and they're like, dude, what is the state form? Like, why do I got this? So 568 is the state form for LLCs to actually file if you're a single member and you have a business. So how this happens, how they know, is basically when you file your LLC, and why a lot of people don't like to file LLCs in California is you have an $800 fee for the business every single year just for doing business in California. So you should be paying that. That's the state form. That's the state $800, right? That $800, a lot of people do not pay it, right? Don't even budget for it. So if they come back and say, pay me, $800 for the last 3 years, you don't even budget for it. Now you got to come up with this money, because what their letter says is basically you file your taxes, you pay the $800 for every year you've been in business. And that can add up real quick if you've been in business for a while. So either budget for it or just do your taxes on time. File your tax returns on time also. So I've been getting a lot of people that, have not filed this form. Another thing is different entities have different federal and state forms that need to be filed. I'm not too sure the form numbers in other states outside of California, but the federal forms, you have the entities being your LLC, sole proprietor, the LLC partnership, you have the S Corps, the C Corps, nonprofits, okay? Each of them have a different form, each of them a different federal form, each of them have a different state form. Okay, I'll check that when I get done. So each of them have a different form, right? I'm sitting here going through my notes, y'all. So business owners have to understand, like, your business type has a different business form that needs to be filed. If you don't file those forms, you get another nice letter, either from the federal or from the state. And when you get those letters, it's either saying pay or quit. These people ain't playing. Pay this fee, file your form, pay this fee, or lose your business name or business entity. It's not even business name, it's business entity. Lose it and start all over. It is what it is. So basically what happens is the business owners, we have lots of reporting to do regardless of this stuff. And sometimes we feel like it's like every single day you got something to do with, somebody trying to get some money from you. But these are very important to keep your business intact, all right? So not filing the correct business taxes can lead to some heavy, heavy penalties. To avoid this, make sure you're filing your federal and state taxes. Depending on the entity you have, sole prop and single member LLCs need to file their federal Schedule C and their state 568 form. S Corps need to file an 1120S and your state 100S form. Nonprofits have their tax exempt form, so you have to send your tax exempt letter to be exempt from taxes with the state. And then you have your 990 forms, 990 or 990N that you fill out for your nonprofit. You got to fill out the right form, or you're going to be penalized for it some kind of way. The other part is, I've seen this. We're going to talk about it, but filing, knowing what entity you have is huge. I do not always suggest people to go get an S Corp to save on self-employment taxes because you don't make enough. But some people have S Corps, and it is one of the strictest, entity types, the C Corps also, where even the nonprofits, where you have to keep track of everything. You have to keep your business, you're supposed to have payroll set up. You're supposed to have your business being tracked, your accounting being tracked. And I've seen people who have S Corps and say they have S Corps filing Schedule Cs. It doesn't make sense. It doesn't add up. So you got to understand, like, every entity has its own lane, and if you're not filing with the right entity, it has penalties to go along with it. So me being me, I want to, like I said as before, I'm trying to help you save some money. Make sure you know what entity you have signed up for. LLCs, you could be a one-member LLC. You are basically similar to a sole proprietor, but there's partnerships with 2 or more people, and then it goes up from there. So you got to understand, where you're at. Not all S Corps I mean, not all entities are pass-through entities. Some of them have their own taxes, and you just get a Schedule K. So you got to understand the differences between them. So that is, I'm about to go home. I'm tired. It's been a long day. I'm going to eat my cookie that I couldn't finish eating because I got on this live. But make sure you guys are liking and sharing this so that all your business besties will know this type of information. At least have an understanding of, you know, I need to do some digging. I need to go talk to my attorney, or, you know, I need to go talk to Sabrina and see if she can help me. But I'm going to be dropping a ebook about the 5 different tax loopholes that you can actually take, and that's for not even just business owners, it's for everybody. So definitely hit me up, send me a message, send me a DM with your email address, and I can send that out to you guys once it's done, and just put 5 tax loopholes or something like that. But then, you know, just put ebook and send me your email. But also, I wanted to make sure that you guys knew that, like I said before in the beginning, we are doing in-person taxes, so it's only by appointment. So you have to book, you have to get on the calendar. But we also doing free tax consultations, tax strategies, so that we can understand what's going on. If you have any issues like the ones that I just talked about, we can work through it, see how we can help you. And yeah, we are here for you. So definitely get on my calendar if you guys need assistance with that. I will drop that link also once I get done off of here. But I am definitely here to help. I'm in the office. If y'all haven't seen my office, go look at the videos. I'm excited. Everybody else is excited, but we are here to definitely help you do your taxes this year, and also other things that are coming along. So be on the lookout for that. I hope to be able to work with you guys this tax season. And if you have any questions, just drop them below. Send me a DM. I got you. And I will talk to you guys later. Have a good Thursday. And if I don't see you tomorrow, have a great weekend. All right. Talk to you guys soon. Bye.